Abu Dhabi Airport duty-free has achieved sales exceeding 1 billion dirhams in 2014, representing a rise of 10.5% versus 2013, which stood at 912.9 million dirhams. Beauty and fragrance emerged as the biggest selling product categories in 2014, with a 31% share of duty-free turnover, increasing sales by 9.7% over 2013. Indian, Chinese and Emirati passengers continued to account for the highest share of sales at the airport. In addition, passenger spending registered an increase throughout the year. A number of new retail stores opened in 2014, including 2 new multi-category duty-free stores, a new 253-metre square fragrance boutique in Terminal 3, refurbished core duty-free stores on the Terminal 1 upper level, and several initiatives, including a new wellness spa and mini-mart outlet. Meanwhile, many of the world's leading brands and retailers are expected to submit bids for the midfield terminal building, which is making rapid progress and will have an annual capacity of 30 million when it opens in 2017. The Dubai-based Emirates Central Cooling Systems Corporation, Empower, has posted a net profit of 410 million dirhams for the year 2014. Announcing its financial results today, the world's largest cooling service provider says the figure demonstrated a 65% growth from the year 2013. Giving an insight into the forecast of growth in the coming years, the CEO of Empower, Ahmad bin Shafar, stated that the company's total revenues for the year 2014 reached 1.5 billion dirhams. Commending the efforts offered by the UAE government, the cooling company's head says the group is aiming to grow at a much faster pace, as many more acquisitions and prestigious projects are planned for the future. Talking about the infrastructural investment strategy going forward, the company states that a 750 million dirham agreement with T-Com Investments to provide district cooling services to Dubai Design District greatly engineered the growth of the group. Looking ahead, the cooling company aims to convert the systems of iconic properties like Emirates Towers, Burj Al Arab, Jumeirah Beach Hotel and the Madinat Jumeirah to district cooling. Reflecting on the importance of abiding by the green building principles, Empower says that it is ensuring that energy resources are utilised properly to avoid any environmental impact.
Energy is actually the source of the life in these days, and Empower are controlling most of the energy saving on the district cooling by using the district cooling concept and saving a lot of energy from electricity consumption, which will add a lot of value for City of Dubai and also for the lifestyle which is in Dubai, especially by using district cooling, so customers are aware that they are using very efficient system and very friendly environmentally for all aspects.
Data released by the National Bureau of Statistics yesterday has showed that countrywide inflation rose in January to its highest level since 2009, as the effect of subsidy reform in Abu Dhabi was felt and school fees continued to rise. Inflation topped 3.7% in January compared to a rate of 1.5% 12 months earlier, as rising energy and water prices pushed up national inflation figures. Householders in Abu Dhabi have seen larger utility bills since January the 1st, after a cut in government subsidies in the Emirate. Housing and utility costs, which account for about 40% of all spending in the UAE, have risen by 7.4% over the past 12 months. The cost of education rose by 4% over the same period, as parents competed for shortage of available primary and secondary school places. Falling oil prices, a strong currency and moderation in Dubai's expensive housing market are likely to reduce prices for many. But higher energy prices in Abu Dhabi will push up the cost of living for the capital's residents. Economists have predicted that inflation in Dubai will probably fall over the next 12 months, with real estate costs softening after it hit 4.5% in January. And the supply of an estimated 14,000 new residential units in 2015 is expected to soften Dubai's rents that had soared as much as 65% since 2011. That's according to a new report released by real estate company Astico. The report stated that the Dubai residential property market also faces the prospects of softening sales activity due to the new supply, following declining sales and rental returns in the second half of 2014. Last year, rental rates rose across all three property types, with apartments showing an average year-on-year growth of 7%, villas 4% and offices 12%. The citywide annual average for a two-bedroom apartment in Dubai was 122,000 dirhams at the end of the year, with an average 6% year-on-year rental rate increase recorded for the fourth quarter. Astico predicted that villa rental rates would remain relatively stable in the most desirable areas, with marginal declines in less desirable areas, although it added that a more significant drop in rental rates could be on the cards from 2016. Looking to apartments, and rents have surged by 65% since 2011, but are still 25% lower than in 2008. Rental rates are 7% higher on average compared to last year. Villa rates increased by approximately 55% since their lowest in 2011, with fourth quarter rates still 20% lower than in the same 2008 quarter, but up 4% since last year.